While everyone's celebrating triple-digit silver, something absolutely insane is happening behind the scenes in the wholesale market. This is absolutely something that no one expected to happen. And truly, the situation slowly but surely gets out of control. I mean, you probably heard it many times already, but now this is getting serious. This is arguably one of the most important videos to watch before January ends. But what is actually happening? And why am I being so worried? Well, let me explain. Disclaimer. The CEO of SD Bullion just came out and described the wholesale silver market this week as an absolute circus. Now, when someone who lives and breathes this market every single day uses that kind of language, something serious is going down, this isn't normal market volatility. This is the infrastructure of the silver market straining under pressure it's never experienced before. Here's what happened, and I need you to understand how unprecedented this is. There were no bids on 90% silver from major wholesalers and refiners. None. Zero. Think about that. 90% silver has been a staple of this market forever. These are the old circulated coins that have been traded, bought, and sold for generations. SD Bullion has never seen anything like this in their entire company history. Not during any market condition. Not during any previous rally. Never. And this is happening right now in a market with record demand from a revenue standpoint. So what's going on? Why is nobody bidding on 90% silver? The theory that makes the most sense is this. Refiners are increasingly refusing to accept 90% silver for melting. There's been this massive surge of new investors flooding into the market, and they don't want old circulated silver. They want newly minted coins. They want the shiny American Silver Eagles, the Maple Leafs, the Britannias. That's where the demand is concentrated. Now, here's where the credit crisis comes in. And when dealers send 90% silver to refiners, there's a time lag. The metal has to be shipped, melted down, refined, and then payment gets processed. During that entire time, the dealer's credit line is tied up. And right now, many large participants in this market are either at or very near their maximum credit terms. The money velocity is through the roof. Metal is changing hands so fast that firms can't afford to have capital locked up waiting for 90% to get refined. At the same time, the lack of available financing is forcing other wholesalers to dump inventory the second they get it. They can't hold it. They have to flip it immediately just to keep the cash flowing. This creates the most bizarre paradox you could imagine in a market like this. There's clearly a shortage brewing. Deliveries on products like American Silver Eagles are getting delayed. Supply is tight. But at the same time, some secondary products are trading under spot price. How is that even possible? Here's how. There's no depth behind that below spot inventory. It's so thin that SD Bullion could wipe it out with a single phone call, and they have been doing exactly that. The inventory exists for a brief moment, gets bought up instantly, and then it's gone. It's not real liquidity. It's distress selling from dealers who are completely credit constrained and need to move metal immediately, regardless of price. And there's another factor crushing the market that doesn't get talked about enough. The cost to maintain hedging accounts has absolutely skyrocketed. When dealers stock physical silver, they hedge their positions in the futures market to protect against price swings. But those hedging costs have gone through the roof, which means dealers literally cannot afford to carry as much inventory on their shelves as they want to. They want to stock more metal to meet this insane demand, but the cost of hedging makes it impossible. So let me translate what all of this means for silver stackers. The plumbing of the physical silver market is breaking. The normal mechanisms that have kept this market functioning for decades are straining under pressure they were never designed to handle. You've got refiners who can't keep up. You've got wholesalers who are maxed out on credit. You've got hedging costs that are prohibitive. And you've got demand that's only accelerating. This is not a stable situation. This is a market that's on the verge of something much bigger. Now, while all of this chaos is happening in the wholesale market, let's talk about what's going on at the Comex, because this tells a completely different part of the story. With only 5 trading days left in January, something unusual just happened. The open interest in January, silver futures contracts suddenly doubled. We're talking about an increase of 223 contracts in a single day, which represents over 1 million ounces of silver. The total open interest closed at 493 contracts. And here's why this matters. When you're this close to contract expiration and open interest is climbing instead of declining, that tells you these aren't speculators rolling positions forward. These are people preparing to stand for delivery. They want the physical metal, and they want it immediately. That means approximately 2.5 million ounces are about to get drained from Comex inventories. That's metal coming out of the system right now at a time when supply is already stressed. And this is happening right after silver convincingly smashed through the $100 psychological barrier. That breakthrough is massive. When markets break through major psychological price levels like that, something powerful kicks in, fear of missing out. FOMO is about to trigger an explosion of new demand flooding into this market. You're going to see people who have been sitting on the sidelines, watching silver climb month after month, telling themselves they'll buy the dip. But now they're realizing that dip might never come, at least not at the prices they were hoping for. So they're going to panic buy, and that's going to compound the supply pressure that's already building. But here's another critical piece. Retail buybacks are declining substantially now that silver has crossed $100. What does that mean? It means people aren't selling their silver back to dealers anymore. They're holding. The flow of metal that normally comes back into the market from people taking profits has dried up. So you've got surging demand on one side and declining supply from buybacks on the other. That's a squeeze intensifying in real time. But here's what's absolutely critical for silver investors to understand. This entire rally from $30 all the way past $100 has happened without an actual supply squeeze. Let me repeat that. We haven't seen a supply squeeze yet. Supplies have been tight, absolutely, but silver has not yet experienced outright panic from industrial users. Think about all the industries that depend on silver. Solar panel manufacturers, electronics companies, medical equipment makers, aerospace. All of them need silver to function, and up until now, they've been able to source what they need, even if supplies have been tight. But what happens when silver keeps climbing and these industrial users wake up to the reality that they might not be able to get the metal they need? That's when panic hits. That's when you see industrial buyers flooding the market, bidding prices up aggressively because they need that metal to keep production lines running. And when that industrial panic compounds the investment demand that's already surging, that's when things get absolutely wild. People need to understand that silver is about to rip faces off in both directions. This isn't going to be a smooth, steady climb. The volatility that's coming is going to be extreme. You're going to see oscillating shifts between greed and outright panic. There will be days when silver surges 10, 15%. And there will be days when it drops just as hard. Silver investors need to prepare themselves mentally for what's ahead, because this is going to test everyone's conviction. So where is this all heading? Let's talk about the bigger picture, because some major calls are being made right now. Bank of America just came out with a prediction that has the entire precious metals community talking. They're calling for gold to hit $6,000 per ounce by spring of next year. Let me say that again. Bank of America, one of the largest financial institutions on the planet, is predicting gold doubles from where it was not long ago. Now, why does that matter for silver? Because historically, silver doesn't just follow gold, it amplifies gold's moves. The gold to silver ratio has been completely out of whack for years. When big money flows into precious metals, silver becomes the leverage play on that entire thesis. If gold is heading to $6,000, you have to ask yourself where that puts silver. We're already past 100, the momentum is just getting started. In the short term, there are projections floating around that silver could shoot up to the $125 to $130 range relatively quickly. But here's where it gets interesting. After that initial surge, there could be a sharp 15% sell-off. Now, before you panic, understand what that sell-off represents. It's a shakeout. It's designed to flush out weak hands, the over-leveraged traders, the people who bought on margin hoping to get rich quick, the new investors who don't truly understand what they own and get scared at the first sign of volatility. That sell-off could trigger a panic among those who aren't prepared. You'll see a rush to exit positions. People will be posting on social media about how the rally is over, how they knew it was too good to be true, how they should have sold at the top. But for those who understand the fundamentals driving this market, that correction isn't something to fear. It's a cleansing mechanism. It clears out the noise and sets the stage for what comes next. And what comes next could be absolutely explosive. After that shakeout, after the weak hands are gone and the market stabilizes, we could see what some are calling the mother of all rallies. We're talking about a move that could take silver to $250, maybe even $300, in a relatively short period of time. Now, I want to be clear. These aren't my personal predictions. These are thoughts being shared by others who have studied this market for years. But they illustrate the kind of bullish sentiment that's building among people who have been in the trenches. Think about what silver investors have endured. Decades of price suppression, decades of watching the bullion banks manipulate this market lower time and time again, decades of wondering if they would ever actually see triple-digit prices in their lifetimes. Now we're here. Not only are we here, but the fundamentals have never been stronger. The supply constraints are real and getting worse. The industrial demand is structural and growing, especially with the green energy transition requiring massive amounts of silver for solar panels. The investment demand is just waking up to the opportunity, and major financial institutions are calling for precious metals to move significantly higher. The future that silver investors have been waiting for isn't some distant possibility anymore. The future is now. Everything is happening in real time. The wholesale market is in chaos. Comex inventories are draining. New investor demand is surging. Industrial users haven't panicked yet, but when they do, That's when this market goes to another level entirely. And if gold really is heading to $6,000, the implications for silver are staggering. This is a historic moment for stackers who endured the manipulation, who held through the bear markets, who kept stacking when everyone told them they were crazy. You're watching the market structure break down in real time. The mechanisms that kept silver suppressed for so long are failing under the weight of demand that cannot be met with current supply. And the industrial squeeze, the real panic buying from manufacturers who need this metal, hasn't even started yet. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.